Welcome back to the deep dive. So, last time, we looked at the Jamaican agricultural market for that week ending March 26th.
Right.
And it was an interesting one. Remember that overall slight dip, just 0.16%?
Yeah, barely moved overall. But the individual crops, that was the real story.
Absolutely. Some big winners. Ginger was up, over 30%?
Yeah, 30.78%, and okra close behind at 28.46%. Big jumps.
Huge jumps. But then you had crops facing a tougher market. Red sweet peppers, Irish potatoes, they were down significantly.
That's right. And the big takeaway then, I think, was that high volatility, over 36%.
Yeah.
Even with supply looking balanced across the nation, prices were swinging quite a bit. We saw those regional differences starting to creep in, too.
Always important, those regional variations. Okay, so let's dive into this week. We're looking at the week ending April 5th, 2025. And our kind of mission today is to really get under the skin of the key chefs, maybe spot some opportunities that have popped up since we last spoke. Now, the headline figure this week, it's a modest average price increase, about 3.92% across the 56 commodities we're tracking.
Modest, yes. But, and this is interesting, that volatility we mentioned, it hasn't gone away.
Still high.
Still high. Actually, it's ticked up a tiny bit. Average price volatility is sitting at 37.72%.
Wow. So prices generally edging up, but still a lot of movement under the surface.
Exactly. It feels, dynamic. That high volatility means prices are really bouncing around, creates chances for quick gains, but also risks if you're active in the market.
Right. Okay. So let's try and unpack that a bit, because a couple of key themes really jumped out at me this week.
Oh, yeah.
Yeah. First, there seems to be a real split, a divergence between some specialty crops and the more traditional staples.
Interesting.
And second, while the national supply looks, generally balanced, there's also this feeling of maybe caution in the market.
That's a good way to put it. And what's fascinating is how these themes are playing out in some pretty dramatic price swings for specific items.
Right.
We've got some clear winners making really impressive gains, but also some pretty significant drops that could have real implications, whether you're growing, buying, or selling.
So that caution you mentioned, maybe buyers being hesitant because of uncertainty.
Right.
We're seeing those drops in staples.
Could be a mix of both. Even if there's enough produce nationally, if buyers are nervous or focusing demand elsewhere, it creates that cautious feel.
Okay. Let's get into the specifics then. The big winners for this week. And there's some surprises here.
Lead the way.
Greenhouse-grown sweet peppers. They are absolutely booming.
Yes.
Yellow greenhouse peppers jumped a massive 55.38%.
55%. That's huge.
It is. And the red greenhouse ones weren't exactly lagging, up 47.6%. Just enormous increases.
And didn't we see yellow greenhouse doing well last time, too?
He did, yeah. It suggests this trend is continuing. High demand for these, especially from controlled environments.
Right. That surge probably reflects demand for consistent, maybe higher quality produce, especially in the cities. Maybe seasonality issues with open field crops are playing a part too.
And in dollar terms, that's significant too, right? Over 300 JMD more per kilo for yellow.
Yeah, and nearly 300 for red. Very attractive if you're a grower set up for that.
Okay, what else is winning big?
Well, following the peppers, you've got imported cauliflower.
Imported cauliflower, okay, up nearly 25%. That's another substantial hike.
It is, and what's notable there is the volatility is lower compared to the peppers. Just under 16%.
So maybe more stable demand or supply factors.
Could be. Maybe a gap in local supply. Definitely raises that question about imports versus local potential.
Good point. We also saw local iceberg lettuce climbing over 17%. Spikes in Kingston, St. Andrews, St. Catherine, Clarendon.
Right, those urban or near urban centers again.
And even local red sweet peppers, open field ones, they're up too. Nearly 17%. So the pepper story is complex.
Exactly. It's not just one thing. But you see the strengths in certain specialty, maybe higher value crops, especially where urban demand is strong. Those regional lettuce spikes really highlight that too.
Okay, so those are the high flyers. Now let's look at the other side. The crops facing a tougher market.
Right.
And this is where that divergence you mentioned really shows up. Traditional staples seem to be, taking a bit of a hit. Green cabbage prices are down almost 10%.
Yeah, nearly 10% down. And look at the volatility on cabbage over 60%. That screams market imbalance, possibly oversupply.
Wow, 60%. And Negro yam and gungo peas also seeing significant drops.
Yeah, Negro yam down over 9%, gungo peas down nearly 8%. For yam, the notes mention volume peaks, so increased availability is likely pushing prices down.
And gungo.
Gungo peas.
Hmm.
It seems like even with some urban demand, it's just not enough to keep prices firm at the farm gate right now.
We also saw local broccoli dip a bit, about 7% down overall.
Still notable. And there were regional drops there too, like that 30% fall in St. Elizabeth. That points towards maybe localized supply gluts.
So connecting this back, balanced national supply overall, but maybe too much of these traditional staples in certain places, or demand just isn't keeping up compared to the specialty items.
I think that's a fair assessment. Enough food nationally, perhaps, but the distribution or the specific demand for these staples isn't as strong everywhere.
Got it. Now let's quickly touch on the regional supply picture. Always adds context.
Crucial context.
Kingston, St. Andrew, St. Catherine are listed as NA4 supply.
Which makes sense, right? They're mainly retail and wholesale hubs.
Exactly. It reinforces that price moves there are really driven by retail demand and what's coming in from the farming parishes.
Okay, but then you have Manchester, standing out with a good supply status.
Yeah, that's significant. Manchester's strong position. There could be opportunities there to perhaps move produce to areas with moderate supply or higher prices. Think about St. Elizabeth Clarendon nearby. So logistics and market intelligence become really important there.
Absolutely.
And then the other end of the scale, Portland, flagged as scarce supply.
That's definitely a concern. Scarce supply can mean price spikes, potential access issues for people there.
Yeah, you'd think some intervention might be needed.
Understanding why it's scarce is the first step. Is it weather? Logistics? Something else? That's key to finding the right solution.
Okay, so based on all this data, this whole picture, what are some of the key opportunities or maybe strategic thoughts that jump out?
Well, the sweet peppers, especially greenhouse, that seems like a clear signal from the market.
Right, those price increases suggest high potential returns.
Definitely. And the idea of focusing production perhaps in areas with stronger supply, like Manchester, St. Elizabeth, Clarendon, while aiming for those premium prices in the cities. That makes sense. Optimizing production and market access.
What about cauliflower and lettuce? They seemed like steadier winners.
Cauliflower's strong price combined with lower volatility. That looks attractive, especially for retail strategies. And lettuce, those rising prices in specific urban areas like St. Elizabeth and St. Catherine, that signals potentially evolving tastes that growers could tap into.
Okay, now flipping back to the ones that dropped. Cabbage, yam, gungo peas. What about risk management there?
Well, with that huge volatility in cabbage, maybe exploring things like fixed contracts or even insurance options could be smart. Hedging against those wild swings.
Makes sense.
For yam and gungo, where prices are declining, maybe thinking about value-added processing. Prepackaged, frozen options, something to buffer against the raw market dips.
And you mentioned Manchester's strong supply earlier. Leveraging that.
Yeah, there's a clear opportunity there. Build better logistics to get produce, especially those high-demand peppers, cauliflower, lettuce, from Manchester to the urban centers where prices are spiking. Strengthen those connections.
Benefits both ends, producers and consumers.
Exactly.
And finally, those urban hotspots, Kingston, St. Andrew, St. Catherine, the data really drives home their role as consumption centers.
Absolutely. The price movements there, those huge jumps for yellow and red sweet peppers we saw, it just highlights the premium consumers there are willing or maybe forced to pay.
Yeah, and even for imported stuff like cauliflower, the price hikes there validate how important those markets are if you can supply them effectively.
It really underscores that understanding retail demand in those major centers is absolutely key.
Okay, great stuff. Let's try and wrap this up for our listeners then. This week's deep dive, ending April 5th. We saw modest overall growth, but still wrestling with that high volatility.
Definitely.
Clear winners in specialty crops. Those greenhouse sweet peppers stealing the show, really. Over 55% and 47% gains. Imported cauliflower also strong.
But on the other side, remember those drops in traditional staples. Green cabbage, Negro yam, gungo peas, significant falls there.
And that high volatility means strategic planning needs to be, well, agile. Keep nimble.
And the regional differences matter. Manchester looking good on supply, Portland facing scarcity. That points to logistics, distribution opportunities, maybe challenges too.
And linking it all back, those urban demand centers, Kingston and St. Andrew, St. Catherine, clearly driving price surges for the in-demand items, underlining that retail focus.
So maybe the final thought to leave everyone with is this. We see this contrast, specialty crops doing well, traditional ones struggling a bit, all against this backdrop of high volatility.
Right.
So what strategic adaptations, whether it's changing what you grow, how you get it to market, maybe adding value through processing, what are the keys to building resilience and finding profitability in this dynamic Jamaican agricultural sector in the coming weeks and months?
A complex picture, as you said.
Definitely complex, but also full of potential for those who can read the signs and adapt.